This session we will be learning what is a balance sheet. So balance sheet is a statement that sets out the assets and liabilities of the firm or a institution as at the certain date. Now this is very important. The definition itself suggests that it's a statement, so it is not a ledger account. Okay, so when you prepare a ledger account or even your trading account, profit and loss account, profit and loss appropriation account, that ledger account is for a particular period. Okay, but balance sheet is not a ledger account, it's just a statement. Okay, so what does it show? It shows the assets and the liabilities of the firm or an institution. So it will state what are the assets and the liabilities of the firm or an institution. Then next is as at the certain date. So this is important, as at the certain date. So when the balance sheet is prepared, the balance sheet is as on a particular date. If you see any ledger account or even your trading account, profit and loss account, or a profit and loss appropriation account, it is prepared for a particular period. This ledger account is prepared for a particular period. Okay, whereas balance sheet is prepared for a not for a particular period, it is prepared as at the certain date or as at a particular date. Okay, so now a balance sheet is prepared only after preparing your trading account, profit and loss account, profit and loss appropriation account. So how does it go? So you prepare your trading account. Okay, find out gross profit or gross loss, then transfer your gross profit or gross loss to profit and loss account. Okay, then your profit and loss account, you prepare your profit and loss account, then you find out your net profit or net loss, okay, before appropriation, and then you transfer this net profit and net loss to P&L appropriation account. Then you prepare your P&L appropriation account. Okay, find out your net profit or net loss after appropriation, and then this is transferred to your balance sheet. Okay, so it will be prepared only after preparing your trading account, P&L account and P&L appropriation account. When you prepare this balance sheet, only after preparing all this account, it will show a correct picture. Okay, then one more thing, since a double entry accounting system is followed, okay, what happens in double entry system of accounting is whenever you debit a particular ledger account, okay, this you credit some different ledger account by the same amount. Okay, so whenever a debit impact is given in a particular ledger account, for the same amount the credit impact is given in some other ledger account. So your balance sheet as at any date, assets should be equal to your liabilities. Okay, so if assets are not equal to liabilities, then there is some error which has been done in your trading account, P&L account, P&L appropriation account or balance sheet itself. So this is one of the tests to find out if your final accounts are prepared correctly. Okay, your assets should be equal to your liabilities. Now we'll see the format of balance sheet and we'll see what are the items that are included in balance sheet one by one. Now this is a format of balance sheet. Okay, in the books of so and so, balance sheet as on so and so date, okay, or balance sheet as at. Okay, this is how you word it. Now see, the balance sheet has liabilities, amount, assets, amount. Okay, so now, if as is explained in my earlier video, okay, now there are three types of accounts. One is real account, then personal account, third one is nominal account. Okay, now real account means your all assets of the firm. Okay, now these assets of the firm will be included in balance sheet asset side. Okay, the personal account means all your debtors account, creditors account, your bank account. Okay, then your representative personal accounts like outstanding expenses, prepaid expenses. So for personal account, if a personal account is having a credit balance, it will be reflecting your in your balance sheet liabilities. Okay, if personal account is having a debit balance, then it will be reflecting in your balance sheet asset side. Okay, the nominal account includes all your income, profit, okay, or expenses or losses. Okay, income and profit will be having a credit account. Now this will be transferred to either your trading P&L or P&L appropriation account depending on your nature of expenses. Correct? Now when you transfer all this account to your trading P&L and P&L appropriation account, you'll arrive at a net profit or net loss. Okay, now this net profit or net loss depending on the nature of balance. If it's a net profit, it is showing a credit balance. Correct? So it will be shown under liabilities account. Now if it's just showing a net loss, it is showing a debit balance, it will be shown as a assets account. Now you'll be wondering how come the net profit will be shown under a liabilities account. Okay, now remember one thing, the liabilities include a capital account also. So a business is different, or a business or an entity is different from an individual person. If I am investing certain amount of capital in the business for the purpose of business, it's similar to a loan taken from me. Okay, even though it's my business, for an entity as a separate, it will be a loan taken from me, the capital. Now whenever there is a net profit or net loss, when you have a net profit, it needs to be distributed to the owners of an entity. So for a business, it will be like a liability which needs to be distributed to the owners of its business. Okay, so net profit will be appearing on the liability side, whereas if it's a net loss, okay, now that net loss needs to be recovered from the people who are carrying out that business. Correct? Or they have to make some net profit in the future years to compensate for that net loss. So it is appearing on your asset side of balance sheet. Okay, this is one of the logic why you include net profit on the liability side and net loss on the asset side. So in this way, all types of account, that is real account, personal account and nominal account, are included in your balance sheet. Okay, now let's see all the individual items which will be included in the balance sheet one by one. Okay, first we'll be starting with the assets account. Now if you see the ledger account, usually all the debit transaction or the debit balances or debit side of the ledger account is on the left hand side. Now here assets will have a debit balance, but they are on the right side of the balance sheet. So this is a format of balance sheet. Now assets, now what will be the assets which are included in your balance sheet? One is first asset which will be included here is goodwill. Okay, so if there is some goodwill which is appearing in your trial balance, that goodwill needs to be included in your balance sheet asset side. That goodwill will be your asset. Then next is fixed assets. Okay, so for fixed assets, amount which is included in the balance sheet will be net of net asset, that is in excluding your depreciation. So what you do is fixed assets, for example if you have plant and machinery, so plant and machinery, okay, now that plant and machinery your cost will come here less your provision for depreciation. Now the plant and machinery account will be showing a debit balance, okay, and this provision for depreciation will be showing a credit balance. Provision for depreciation is nothing but the accumulated depreciation, okay, of that particular plant and machinery till date. Okay, now even though this is showing a credit balance, it is not included in the liability side. This is for presentation purpose. Since the depreciation is related to that particular asset, it will be reduced from the cost of that asset to arrive at the net amount of fixed asset as at the particular date. To find out more about what depreciation, what is the entry for provision for depreciation, you may refer to the depreciation accounting video. Okay, then the next is say furniture and fixtures. Same way, less provision for depreciation, or you may also call it as accumulated depreciation. Okay, plant and machinery, furniture and fixtures. Then there may also be some other fixed assets. So in the similar way you have to present all the fixed assets. Then you will have some investments. Okay, so again investments is, if you see the nature of investments is like a personal account, okay, but it will have all the debit balance. So investments will be reflected here, that is whatever amount has been invested for a particular purpose, okay, of the business, it will come in investments. Then next will be your current assets. Okay, what is current assets? Current assets means assets which are moving fast. Okay, they are assets of the business but they are moving very fast. Now what are the assets? Now this current assets will include your stock. Okay, now this will be the closing stock. Okay, so if you have seen that trading account, how to prepare trading account video, that when the closing stock is given, one effect of the closing stocks goes to credit side of trading account. The second effect comes here, that is current assets. Okay, now closing stock may be of raw material, okay, the work in progress, finished goods. Okay, so all this closing stock will be appearing on the asset side of the balance sheet under the head current assets. Then you have cash in hand. Okay, that is cash which is available in the cash box as at the end of the particular day, that will appear here. Then your bank balances. Okay, so as you know, the bank account is your personal account. So bank balances which are your normal debit balances, all those bank balances will be appearing here. Okay, then one more current assets which will appear here is sundry debtors. Okay, that is your debtors account, correct? So all those debtors will be appearing in your current assets. Okay, since debtors will be showing all the debit balance. Now there may be some advances from creditors. Okay, now this advances from creditors will also show a debit balance. Okay, all this will appear here. Then there may be some prepaid expenses. So expenses that are prepaid will appear in the current assets. Okay, now let's go to the liability side. Okay, liability side, the first item that will appear on your liability side is the capital account. Okay, so in case of your partnership firm, you will be showing a separate capital account. Say if you have a partnership firm with the 3 partners, it will be showing you as a A's capital, B's capital, C's capital. In case of company, it will be showing it as a your share capital. Okay, then capital account will be bifurcated as owner's fund. Okay, so in owner's fund you will have share capital, or if it's a partnership firm, then individual capital account of partners. Okay, then you will have reserves and surplus. Okay, now this reserves and surplus will include your profit and loss appropriation account balance. If it's showing a credit balance, it will be reflected here. Okay, so profit and loss appropriation, credit balance. Then any other reserve which is created for the specific purpose will be reflected here. Now reserve means the funds which are taken out from your profit for some specific purpose. So the reserve account will also show a credit balance. Entry for the reserve account will be your profit and loss appropriation account debit to that particular reserve account. So you're taking out some part of profit for a specific purpose. Okay, so that will be reflected under reserves and surplus, balance sheet, liabilities side. Okay, then there may be some long-term liabilities. Okay, for example, you have taken a bank loan. Okay, so that bank loan will be reflected here. Okay, then there may other liabilities are your current liabilities. Current liabilities are liabilities which are for the short period. Okay, for example, your sundry creditors is a current liability. Okay, now usually the creditors you pay it off within 1 month, 2 months. Okay, so they are not for the more than 1 year. Okay, so all those come under current liabilities. Then there may be some advance from debtors. Okay, now this advance from debtors will show a credit balance, so this will be reflected here. Then there may be some outstanding expenses which are yet to be paid. That expenses will be shown here. Okay, then if there are some any other personal account, you need to see what is the nature of account, what type of balance it's showing. If it's showing a credit balance, then if it's a short-term liability or a long-term liability, and then accordingly you need to group it in the balance sheet. Similarly, if it's showing a debit balance, then you need to identify whether it's a short-term asset or a long-term asset, and accordingly you need to reflect it in your balance sheet. Okay, now there is something known as miscellaneous expenditure. Okay, so what is a miscellaneous expenditure? Sometimes in business what happens, there is a huge expenditure which is spent in 1 year, but the benefit of it will be derived in some say for future 5 or 10 years. Okay, for example, there will be some advertisement expenses. Okay, if you spend some advertisement expense, or if you incur some advertisement expense, say you are incurring advertisement expense of 10 lakhs for the particular financial year. Okay, there is mass advertising which you are carrying it out, or mass marketing process which you are carrying it out, and the benefit of that advertisement will last for another 3 years or 5 years. Then what you do, you divide that particular advertisement expense for 5 years, and then you expense out only 1/5 portion of that advertisement expense for the current year, and the remaining advertisement expense you carried forward for the 4 remaining years. Okay, all those expenses, miscellaneous expenditure, will be reflected on the asset side of the balance sheet. It's reflecting on the asset side because these are the expenses which are incurred, but the benefit of those will be for the future years. Okay, so they are reflecting on your asset side of the balance sheet. So once all the items are included in your balance sheet, you need to find out total of assets and total of liabilities. Okay, so total of assets and total of liabilities. Now, as explained earlier, your total assets should be equal to the total liabilities. Okay, so if total assets are equal to the total liabilities, this is one of the confirmations that all your final accounts are may be correct. Okay, but if total asset doesn't match with your total liabilities, then there may be some error in your, either in your trading P&L or in even in your balance sheet. Okay, now if you see the balance sheet presented here, assets and liabilities, the assets and liabilities are presented in the order of their permanence. Okay, so long term assets, they are presented first, and then the short term assets are presented in their current assets. Similarly, for liabilities, your capital account is presented first, then your long term liabilities, and then your current liabilities. Okay, some may prefer it to present the balance sheet in the order of liquidity of the assets also. That is, all the short term assets and short term liabilities are presented first, and then the long term assets and liabilities are presented, and at the end the capital account is presented. It depends on the organization and nature of business and the statutory provisions in the particular country. Okay, so how to present the balance sheet. Yes, this was about the balance sheet. Okay, thank you.